government spending is taxation of one form or another. It will turn into taxation, whether actual taxes to try and cure it, or in the case of a rapidly growing economy, the taxes that go with that, that would be a good solution, or inflation. And many people look at what's going on now and say, this is a recipe for inflation.
Bitcoin recently hit a new all-time high of more than $37,000. This has made MicroStrategy's multi-billion-dollar bet on the flagship digital asset a hopping $1 billion profit. Bitcoin's price rose to almost $38,000 on Thursday, its highest level since May 2022. That month, the crypto market went through a big drop, hitting a low of about $16,500 due to the collapse of Terra's algorithmic US stabbing coin and the subsequent fallout that affected several crypto firms, including FTX and Celsius. However, Bitcoin has made an amazing recovery this year, posting a year-to-date gain of over 100%. This is mostly due to growing optimism surrounding the possible approval of a spot Bitcoin exchange-traded fund ETF. This price rise has translated into big gains for MicroStrategy, whose investment is now showing a paper profit of $1.2 billion as of November 9th.
Fiscal policy. The government may shut down in mid-November. We do have a new speaker in the House, but there is still partisan saber rattling, or they may get a continuing resolution, so we don't have to deal with this over the holidays, and move the debate into January. It's just becoming de rigueur now, and I think investors are getting used to it. They don't like it. Nobody likes it, but it is what it is. The other thing that happened actually this week was an executive order on artificial intelligence, which we think can be described as serious overreach and certainly favors the incumbents and we think would really hurt innovation. So it is an executive order. We do think that both Bitcoin or crypto or digital assets and artificial intelligence now could become part of the election year debate. It seems like both groups, the Bitcoin and crypto digital asset community and the AI community, except for maybe the largest players, are both up in arms about this executive order. If it becomes an election year issue, we believe that candidates will distinguish themselves with their points of view on these topics. And what I found interesting in our brainstorm today is that both of these, the crypto/digital assets controversies vis-a-vis this administration, and now the AI controversy, both of them are bipartisan. So they'll get some attention. And if there is a change in the administration, of course, that executive order will probably be no longer because, again, we think it's going to become an election year issue. We're going to do more charts this time. We got some good feedback, and thank you for that. So fiscal policy, let's just look at the facts. You can see here the federal deficit as a percent of nominal GDP since the late 60s. And I remember in moving into the business or coming into the business in the late 70s, early 80s, during the Reagan administration, when the deficit hit 5%, there was hell to pay. I mean, both sides of the aisle were up in arms. Now, it happened because of back-to-back recessions, you can see in the shaded lines there. And as Federal Reserve Chairman Paul Volcker was slamming the brakes on money growth. And so we had a difficult period. And typically the deficit does go up during difficult periods, recessions in particular, because of what we call contra-cyclical spending. This is what government is supposed to do, provide a safety net. Well, you can see what's happened since then. We're now, without supposedly without a recession, we're at roughly 6% as a percent of GDP, the deficit is. And so the question is, oh my goodness, what would happen in a recession? Well, you saw what happened in COVID. During COVID, that's where contra-cyclical spending really kicked in. And so we're back roughly to where the deficit was pre-COVID. Now, as many of you may know, we believe we've been in a rolling recession for the last few years, and we'll get into that with more charts. So maybe this spending and this deficit is more contracyclical than many people think. And we learned from the early 80s that the best way to get out of a deficit like this is to have very rapid growth. So you'll look at the 80s and 90s. We had spectacular growth. Technology was coming of age. Inflation and interest rates were coming down. And you can see what happened to the deficit. It turned into a surplus during Bill Clinton's administration.
Because of the positive mood around Bitcoin, many Bitcoin maxes went to X, which used to be called Twitter, to show how positive they were. Bitcoin was $1,580 a year ago today, thanks to CZ, CEO of Binance. You are so lucky if you bought or kept it. Also, Natalie Brunel told everyone in #Bitcoin, I should have bought more. Robert Brito, host of the show What is Money, also wrote on the social app, Bitcoin is the only way to disconnect from the matrix, and so many other things. Cathie W., CEO of ARK Invest, also talks about her thoughts on the current state of Bitcoin bullishness. Now let's watch the movie.
Government spending is taxation of one form or another. It will turn into taxation, whether actual taxes to try and cure it, or in the case of a rapidly growing economy, the taxes that go with that would be a good solution, or inflation. And many people look at what's going on now and say, this is a recipe for inflation. The way to get out of debt is to inflate it away. We don't think that's going to be the case. And we'll get into a few indicators in a moment that support our view that actually the risk is not inflation moving forward. It is deflation. So now let's skip on to monetary policy. Now, Chairman Powell this week during his comments after the board meeting, I think he had an inkling that the employment reports this week were going to be weak. I think he probably had a sense of initial claims. They went up. But also perhaps an early read on the employment report, which today was very weak. And one of the reasons it is so weak is this chart. So this is money growth, M2 growth on a year-over-year basis, going back into the 60s, early 60s. And you can see we've never seen a decline in money like this in this period of time. You have to go back to the 1930s, which of course was the Great Depression, to see a decline in money like this. Now, this is the other side of what happened during COVID. So it's it's understandable to some extent. But now we're soon going to be lapping 1 full year of negative money. And so the course correction has taken place, we believe. If money doesn't pick up, then what we will conclude is it's becoming a serious drag on the economy. And deposits are leaving the system. The regional banks still are losing deposits. That's part of the decline in money. And that's not a good thing. In fact, the KRE Regional Bank Index is revisiting its March lows when we were in a crisis around the regional banks. So the regional bank index is a warning that Fed policy has just overdone it here. We hope it doesn't break down the index. And it is possible that some of the numbers coming out now are making the case for a Fed pivot so clear that the regional banks will not face as stiff a competition from money market funds and will be able to attract deposits.
Bitcoin price rose about 8%, breaking $36,000 and $37,000 psychological levels to reach $38,500 intraday high. This favored longs as more than $1.56 million in short positions were liquidated, but the elation was short-lived as crypto plummeted almost 5%. The long squeeze liquidated up to $17 million in long positions, wiping out $1 billion in open interest in hours. A short squeeze is an unusual condition that causes a rapid rise in the price of an asset when many investors are betting on its price falling. The price jumps higher unexpectedly and gains momentum as many short sellers cut losses and exit their positions. Following a Bloomberg Intelligence specialist's announcement, Bitcoin speculators continue to outpace Bitcoin ETF approvals. James Cart said a brief window opens tomorrow for SEC to potentially approve all 12-spot Bitcoin ETF applicants, including Grayscale GBTC, for at least 8 days. It comes near the anniversary of FTX's demise. The now-defunct cryptocurrency exchange filed for bankruptcy around this time last year. Leave your predictions for Bitcoin's price by year's end in the comments below. Don't forget to like, subscribe, and switch on notifications. Thanks for watching.